Good morning, traders. It's 8:01 a.m. Chicago time on Monday, the 24th of July, 2023. Hope you had a great weekend. You're well rested. This is episode number 2508. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got on the Convergent Trading pre-market summary sheet. I'll start out by saying that I'm not feeling so well this morning. I have not slept at all last night, so I'm struggling this morning. Convergent members, I'll put it in the Maven's channel, but I'm going to announce that I'm gonna pack it in today, head home, and try to sleep so as not to make whatever it is worse. So, not feeling so good. So, hopefully, I can be coherent here, but I wanted to make sure that I left you with a trader bite at least today before I headed out. The market posture this morning is mixed. Really, we are completely imbalanced across the board. Not much to price in at the moment. But I want to bring your attention to the fact that this is one of the most important weeks this summer. Huge releases, and as a result, the market is expected to reprice a lot of what comes out this week. This morning we did get the manufacturing PMI numbers out of Europe. And then looking at for the rest of the week, just because it's Monday and it's such a key week, we have IFO business climate out of Germany tomorrow, the inflation rate out of Australia, and then Wednesday we get the FOMC interest rate decision. I would suggest you take a look at the FedWatch tool and look at what's expected there. I'll be on, of course, on Wednesday. And then Thursday, we have GFK consumer confidence. We get the ECB on Thursday as well, durable goods, GDP growth rate out of the US, and then the ECB press conference as well. And we also on Thursday get the Bank of Japan rate decision. So FOMC, then ECB, then Bank of Japan, and then on Friday we get GDP out of France, Germany, inflation rate out of Germany, and then we get the core PCE, which is really important for the Fed on Friday, as well as personal spending and personal income. That's just one element. The other element is this is by far the busiest week in terms of equity reporting. There's some really big names coming across this week. We've got, oh man, we have, let's see, Alphabet, we have Microsoft, we have, let's see what the high impact. So we have tomorrow, we have Microsoft, Alphabet, Visa, Texas Instruments, Raytheon, Verizon, General Electric, Chubb, 3M, General Motors. We've got Archer Daniel, Nucor, Biogen. Wednesday, we have Coca-Cola, we have Meta, we have Boeing, Union Pacific, Airbus out of Europe, Porsche out of Germany, Rio Tinto, we have AT&T, we have ADP, GlaxoSmithKline. You get the drift. CME reports. There's just a lot out here. Amazon on Thursday. We have Nestle out of Switzerland, MasterCard, AbbVie, L'Oreal, McDonald's, Comcast, T-Mobile, and so on and so forth. There's just, Mercedes-Benz that's also on Thursday. So across the globe, there's just a very heavy presence in terms of earnings. Today we had Vodafone and a couple of others, and then after the close we got Cleveland Cliffs, Whirlpool, Crown Holdings, NXP Packaging, Corp of America, Liberty Global. As far as the big drivers, of course, I just covered mega cap earnings as well as key central bank reporting this week. We got the flash PMIs out of France and Germany, UK, EU, all lower than expected. Spanish elections failed to produce decisive outcome. And then the Chinese Politburo met and concluded that they need to take further steps to create demand within China. Demand is very soft. The market has been very, very uninterested or unresponsive or uninterested in whatever China has done so far. I think generally the sentiment is disappointed. Has been disappointing, so the market has not been responding to what the Chinese have been doing so far. AMC shares jump on stock conversion plan halt. And then for today, we have the S&P Global Manufacturing PMI and Composite and Services PMIs all coming out 15 minutes after the open. We have a 2-year note auction, and then let's take a look at the S&P. And I want to remind you here today that we have updated the rotations as well as the ranges. Again, this is all described down here, what these rotations are based on. These are quantitative measures that we produce once a week for Convergent members, and we share some of them here. The rotations in the S&P have dropped dramatically. I think there are about 5 is the average extreme of a normal rotation in the S&P, and it's dropped to 4.25. So essentially, volatility and rotations are collapsing in the U.S. indices. Steady in crude, as you can see there, the 0.22 is holding steady, but everything else, it's come off quite a bit. So here, what you have is more tightening of risk, but also it means that we have to bring in or pull in our targets and our scales and things like that. That's what those numbers mean. The S&P currently is in a multi-distribution, really a double distribution profile with a point of control right around that 67 area. 149,000 contracts have traded. Pretty relatively light. The inventory is 49% long and 17 points of range, which is okay. It's better than some of the days we had last week. But most of all, what we need to take away from this is the fact that we are really inside. You know, we've had this big wide-ranging day, and what we did is we traded on Friday inside of that. We opened, if you recall, on Friday, if we look at our plan for Friday, we were opening during the trader bite, we were trading at 86 or so, and I told you that my view is 81.83 is the line in the sand, and if it pushes through the 81.83, I'm looking for 65. As you see on the screen there, this is scenario 3. So open, if it had opened at 86, which was above 81.83, I expect 83.81 to hold. I expect it to push higher. That's the primary scenario. Retest to 4,600. And then if it breaks the 83.81, we're looking for 65. Here's what it actually did on Friday. What it did is it opened right inside of that zone. It opened essentially at 82, splitting the 81.83. Quick test up, and then from there, it just wasn't able to hold on to the higher prices. It squeezed up to 82.75 or so, and then it pushed lower, and look at where it got. It got to the 65. This was on Friday. This was scenario 3 playing out very, very well. We ended up having a market that hugged the initial bounce, so it got almost all of its business done within the first hour. This yellow line, you can see it doesn't extend very well above and below the yellow line, and it remained inside of the prior day's range. This is a market that's completely imbalanced. Remember, this area here, the 45.77 or so, is now acting as a balance area above the 45.50. And so here we are. We come in today and we find ourselves trading at 45.73. This is where the S&P currently is. So it's trading right up against the TPO point of control. It's trading below the volume point of control, which is at 77.50. 77 is the overnight high. So what we did is we closed at the 65, basically 64.75 settlement, and then we pushed the overnight session, had a weak low, it pushed the low, had a weak low, and then it pushed all the way back up to this volume point of control area, this kind of high volume area in the 45.77 area, and has come off and is holding sideways. In the S&P is holding above its mid and full session VWAP, full session mid, full session VWAP, so it's looking kind of bullish. But let's step back and look at the big picture, and what the big picture is saying is that we are currently in balance. We're balancing inside of Thursday's range. So Friday balanced inside of Thursday. Today is opening inside of Friday, inside of Thursday, which is opening inside of Tuesday's range. This weak structure day that we had that ran up. So we took a lot of this back and we were kind of hanging sideways. So we've got an extreme at the top and we're pulling back. So it's really important to monitor Friday's high and low. We want to, those are going to be your first clues. And then once it gets to, say, Friday's low, which was the 64, once it gets to 64, we want to see if there's going to be a liquidity test beneath there and then a pop back up, or if we want to see if it breaks Friday's low of 64 and then it forces many participants to kind of bail out, as this now has become a rounded top, or what's called a market structure high. Okay, a market structure high where this is the peak bar, lower high, flushes out the bottom, and this is likely to force stops underneath there, and we're likely to find ourselves back into the 45.50 area pretty quickly. So just be mindful of the fact that we have an inside day. We're compressing here, and we're opening up against balance within that inside day. The volume point of control, which is this white line, is a little different than the TPO point of control, but they're still within that 45.77. We do expect the range stats to kick in. We expect, probably, what was the overnight range again? Overnight range so far 17 points. So we're looking for something like 24 to 28 points for the day, something like that. And we're trading at 45.73. So I would say today is probably one of those days where you kind of need to sit on your hands. At least that's what I would do. Not going to be here, but I would sit on my hands and just let the market decide what key area it needs to test. Now, here's the thing. One of the difficulties that most traders have is to be patient. Mostly because traders don't know why they're being patient. So if I told you, if you are trading a prop account of mine, you're working for me and you're trading my account, if I told you, be patient, the problem you're going to have is trying to determine when you should act. You're patient for what? And so this is why having a plan is important, because it tells you when you should engage. You should definitely not be engaging all the time. Most of the time, the market generates poor quality setups or poor quality risk returns or returns per unit of risk. And then there are times when there's a huge advantage. So most of the time, you have a coin toss or worse probabilities. And then there are times when the probabilities tilt enough on our side with well-defined risks so that we can size a trade with good returns per unit of risk, that even if it's a 50-50 play, we can make some money. That's the goal, that's the game. And so the question for most traders is, if I told you to be patient, would you know what you're patient for? Would you know when being patient would end? Most traders will not know. And this is the part that must be defined. This is the most important reason that a trading plan exists, because otherwise everything looks like a trade, and everything doesn't looks like a trade you shouldn't take, or everything looks like a threat. So everything looks like an opportunity, or everything looks like a threat, unless you've defined what you're waiting for. Today is an example of a day where it is easy to see what to wait for, and that is, as long, for me, depending on what it does, of course, I'm trading intraday, so I'm a day trader, always have been. There's market generated information that occurs at the open. You know, where do we open? What's the opening swing? What's the IB? How are we trading versus the previous references, or the DGPs, the day generated prices, like full session VWAP, full session mid, and then the overnight point of control. All of these things provide some clues, and there are some statistical setups within these things. But for clear, structured trades, given what you have on your screen here, that we are inside of a wide-ranging day last Thursday, and we've had an inside day on Friday, and we're right on top of the point of control. This is basically a market that's saying, doesn't matter between Friday's close and this morning's open, there is nothing new for us to price in, and we only make money when prices are discovered, right? When the market goes through a price discovery or prices change. And what it's saying is, we're okay. This is balanced, this is okay. So when I tell you this morning, be patient, the structure for which to be patient today is really the high or the low of Friday. That's your first biggest clue, major clue, that includes many different time frames, that tells us what the auction is going to do. What it's going to do at that point, I can't tell you already. It's either going to check for liquidity above, fall back in, check for liquidity above, find interest from buyers and squeeze, or most likely is fall back in, or it could go to the bottom, check liquidity below, see if there's any interest. Buyer interest comes in, comes back into balance. The market is balanced. People are trading from the outside in, or trading a regression type approach. Earlier in the session, you might get clues by how it treats value high and value low, because it's a balanced day and it's opening right on top of the point of control. So the value area that's highlighted right here at 81-ish and down here at 70-ish provide early clues. You know, if those hold and it keeps coming back in, just keep sitting on your hands, and there's not much going on. But unless the key structures are broken, you're trading in the noise. You're trading with all the scalpers and all the algos and everything else. So I want to leave you with that. I don't have a plan other than that for today. Unless it breaks, there's really not much we can do. And if it does, then we start checking key areas. What are key areas we're checking? Look at this high right here from last Tuesday. Look at the high retested and missed by a tick last Thursday on the push higher. So we put in a high on the rally of Tuesday at 94.5. We rechecked it last Thursday. We missed it by a tick. This is going to be a very, very important area for us to test. So that's an important test right up here. Okay. Once we take out that 94.25, then I'm looking for the point of control of that day, which is way up here. This is a naked point of control at 604. That becomes a key target. Other than that, if it breaks the bottom, really, it might push into the low of Thursday, but really there's not much for us to play on the downside. With so much coming for the rest of the week, I really strongly urge you, this whole 7 minutes that I've been talking is to try to urge you to be patient and to use a bigger time frame like this chart for me is very important. Um, this chart here is very important. This is the same market profile, but expanded so that I can see, you could see that Friday's action was just a lot of overlap. This helps me see how each bar, each bracket is trading against the prior. Um, just keep your mind on the bigger picture so that you're not caught up trading in the middle of nowhere. The Nasdaq exhibits the same kind of conditions here, except the Nasdaq is quite a bit weaker. The Nasdaq has put in a lower high and a lower low, but it finished. If you look at the Nasdaq, the point of control, the volume point of control is in line, and it finished with a pretty big belly in it, and it's trading right up against that belly. The Nasdaq is very likely to test lower and come back in, if anything. I'll leave you with that. Good luck, and I'll catch you tomorrow. Take care.